Good morning, everybody. It is 8:45 a.m., November 13th, 2023. It's Monday morning, folks. Monday morning, we are back. We are here for another day of the market open. I hope everyone had a great weekend. And it's time to get back into the market open. This weekend was a fun weekend for me. It was Diwali weekend for everyone who celebrates Diwali. Indian Festival of Lights is what it is referred to. Basically, every Diwali, essentially, at least in my house, we have a little prayer at night. We put up a ton of candles in the house, and so there's a lot of lights. You can't really turn any lights off. And you go and you give what we call matai, which is sweets, to some neighbors. And because we moved to like the suburbs in 2020, at least, that's where my parents bought a house. There's actually a lot of Indian neighbors we have around us. So the whole block is kind of celebrating Diwali. You also do firecrackers, not as big as 4th of July, but like firecrackers on the street. So it was a fun weekend. I hope everyone else had a good weekend. Number one, Elon Musk making some new Tesla claims around FSD. We got to talk about that. CPI data, November 14th. So is that tomorrow, November 14th? It's either November. Yeah, I think so. That's either coming tomorrow or on the 15th. I have to check correctly. I'm pretty sure it's November 14th, but then that'll be CPI coming tomorrow. And then on top of that, we've got Palantir price action. Been phenomenal since Friday. Had that amazing 7% rally on Palantir when I ended the stream. So I ended the stream around 10 a.m. or 10:15, and then by 12. Palantir rally 7% was just absolutely insane. So going to be super exciting to see how that rally continues, what goes on from there. And then on top of that, you got a macro condition that is kind of getting easier, kind of getting better than what we thought it was before. So we got a lot to talk about, a lot to discuss, and ultimately a lot to see around where the market is going. Jin Chao Neo, T-Bone, Victor Hernandez, David Park, Billy Jack, Zebing, Carl, Yvonne, Mikkel. I'm seeing some new names I haven't seen before in the chat. Thank you all for being here. Byron, Imnob, Greg. Good morning. Hakun, Sethi Roth, Garcia, Big Billy, Kelly. Thank you. My hair is wiling. Yeah, my hair is absolutely crazy in the morning. She said, my love. That's so nice. Kelly, thank you for being here. Adam, Garcia, Jeremy, John Stevens, Sanjay. Happy Diwali to you too. Alex Clemens, Jared, James, Sam Chan, Darkstar, Kane, good morning. Jittery Hobo, that's an amazing name. Lewis, you said shout me out. Lewis, my guy, you're shouted out. There are some new names in the chat. I have not seen a lot of people here before. So thank you all for being here. And let's get started with the market open. I want to say one quick thing, guys, real quick before we start. I ordered something over the weekend on Amazon, and I think it's going to 10x my productivity in regards to the market open. I have officially made my iPad into a laptop, as you guys can see. I mean, this is absolutely incredible. I didn't know you could do this. I mean, I knew you could do this, but like this is a 2017 5th generation iPad. I bought this for my mom with my own money in 2017 because I started making money, and I got this for her during the summer break. That's when like she wanted an iPad or stuff. Now she doesn't really use it, but I got it for her then, and she was, super happy of it, super nice. And then I was like, what if I just put a keyboard on this, and now during, I can like look for updates, all this stuff. So I feel more productive just typing on this thing, even though there's no mouse, which is like kind of annoying. But nonetheless, that's going to make the market open even more productive. Perry, Mr. John, Ralph Lauren, Daryl. Yes, yeah, some of these names I've never seen before. So either you guys are typing for the first time in the chat, or you're new here. If you are new to the channel, welcome. It is time to get into the market open. So let's start off with some stuff from Elon. I think we want to talk about that first. Let's get into some Tesla stuff. Then we'll move on to Palantir, and then we'll get into some macro stuff that we have going on. So couple things real quick. Let me just adjust this here. Okay, and cool. So Elon Musk said a really interesting thing this week about Tesla. What did he say? Well, he kind of promised that we're getting some FSD coming up soon. This was really interesting to see from Elon Musk. I mean, I think he's kind of trolling, but he's also kind of not trolling when he promised this. Let me pull up the tweet right here. Elon Musk essentially said, when asked a question, when is FSD 12 coming out? Now, for those that don't know, FSD 12 has been rumored for a very long time. It's in beta. I think it's in like 400,000 different cars, or maybe I'm getting that wrong in the number, but the beta version is in a ton of different cars. So this account says, hey, Elon Musk or anyone else on the Tesla team, any guess when customers might be first be able to try out FSD 12, not the beta, but the actual FSD 12 product. Elon says about 2 weeks. And as you can see from the responses, everyone's like, oh, goodness, he's doing this again. Elon tends to promise things and not really deliver on the promises as soon as he promises them. Eventually, he does deliver because he's Elon Daddy Musk and he knows how to deliver. But whenever he puts these price targets out, or not these price targets, these time targets, they end up not working out. What's really interesting about this, and I wanted to bring it to everyone's attention, is for a couple of reasons. Number one, Cybertruck's supposed to be launching in 2 weeks as well. So it is oddly peculiar that if the Cybertruck launches in 2 weeks at the end of November, you get a world where Elon also launches at the end of the year. If Elon Musk somehow launches FSD at the same time that Cybertruck launches, I don't think anyone is expecting that. That would be pretty crazy for Elon to actually be able to pull that off. But if he does pull that off, there's going to be a lot of people that are much more excited about what he's doing. And guys, give me just 1 second. Let me switch the Wi-Fi real quick. I was on the wrong Wi-Fi, so it'll pause for like 2 seconds, and then I'll be right back. Should be back. Cool. We should be back. Sometimes it connects to the router and not the actual source of the Wi-Fi. So this should be good now. We should be good. Okay. So the interesting thing, right, is that if FSD were to be announced in 2 weeks along with the Cybertruck, I think that would be a major boost for shareholders. I think shareholders would be super excited. I think Wall Street would be super excited. We just got a new price target on Tesla. That's $146 from HSBC. I have not read the entirety of that price target, but from what I understand, the core thing around the price target is that automotive margins are going down. Interest rates are not necessarily being cut anytime soon, even though we have some new data that they might be cut by March. And I'm going to play a clip in a little bit talking about when interest rates might be cut a little earlier than expected. And if that's the case, then I think the $146 price target doesn't make that much sense. But if Elon can launch FSD to the public 12 along with Cybertruck, I think it's going to be a hell of a market rally for Tesla. Tesla right now, 216, up 0.70%. Some people in the chat are saying, what's the difference between FSD 11 and FSD 12? From my understanding, FSD 12 is using more neural nets and a different type of vision programming around how their AI is interpreting, what to do, when to make the turn, etc. They showed off the beta a couple months ago on Twitter versus some of the old material that it was trained on, where it was just using what it was trained on, and then it decided based on the training data what to do. FSD 12 is like it's actually learning in and of itself without the training data how to act in a more significant way. At least I think that's my understanding. I could be getting that wrong. That's an elementary take on what FSD 12 is. The point is it's better than FSD 11 by all measures. And so if they can get out to the public, obviously that's going to be very good for Elon, and it's going to be good for Tesla as well. I give that chance 0. Inbound, I know you are a big Tesla shareholder. So you got big Tesla shareholders calling Elon out on FSD, saying it's not going to come anytime soon. Look, I kind of agree with you. It's probably not coming anytime soon. But if it did, that would be very, very good for Tesla shareholders. And it would be very, very good for Tesla stock. Good time to buy Tesla today. I don't know about that. I don't know if it's a great time to buy the dip on Tesla per se. It comes down to long-term perspective. Again, 216, $682 billion market cap could be cheap long-term, could be very expensive short-term if interest rates and inflation continue to be a problem. Now, I think inflation is not going to be as big of a problem anymore. We have some new data we're going to talk about that with today. But this is where you got to really look at the data and then make a decision on if you want to hold it long-term or if in the short term there's going to be more pain. So we will see what ends up going on from there. Ray says, I have too much Tesla, and yes, Elon is lying. It's funny that he did say 2 weeks, though. Like he just kind of threw it out there, even though he knows he's been accused of lying so many. Like if he just threw it out there, to me, it's kind of like, why did he throw it out there? Is there anything that he, really thinks might be coming up in a different way? All right, that's Elon and that's Tesla. We'll see what happens in 2 weeks with Cybertruck and with FSD. Let's move on to Palantir. So I wanted to spend a little bit of time on Palantir because we didn't get to talk last week after the incredible run that we saw on Palantir. So why is Palantir so interesting? On Friday, it was at 1889, and I was like, all right, that's cool. And we talked about it was up and all that stuff. And then I think it went to like 1830 by the time I ended the stream. Right now it's at 1956. It went to a high of 1967 on Friday. It was like this really weird kind of, it went from 1889 to 1904. And I was like, oh, that's cool. We're in the 19s. Then it went from 1904 to 1915. I'm like, oh, that's nice. Then it went from 1950 to 1930. And when we were in the 1930s, I was like, it's going to be kind of hard to get back to 1889. Then it went from 1940 to 1950 or 1930 to 1950. And I was just like, this is kind of insane. And then we went to, I think, 1971 or 1978. We topped at the peak. Now, it's interesting because we saw this price action happen for Palantir before in the summer, right? In August, when the S&P 500 was approaching 460, we saw Palantir go from $12 to $20 within a matter of a couple of weeks, right? We saw literally going up and up and up $1 every single day, and it hit that level. And I think a lot of that was based on momentum that was, purely rooted in retail. It was, the earnings were not that good, right? We had just put up $533 million. It wasn't really at GAAP profitability. It was only 2 quarters in. So it was really just random kind of valuations going insane. Now we had Q3. Q3 was pretty amazing. And I think that 7% gain in a day was definitely institutional. I do not think that 7% gain in a day was a bunch of retail coming in. Now, once it went up like 3%, 4%, I think retail started piling in and a lot of retail started buying. But I don't think it was purely all retail. The reason I think we had that 7% rally is really because of the NHS contract. I think that NHS speculation came out. It hasn't been announced yet officially. Hopefully it will be announced soon. And because of that NHS announcement, I think a lot of institutions were just like, we'll just buy the stock and we'll keep things moving and we'll go from there. So, and quite frankly, the reason I think a lot of institutions were getting in is because you got people like Meet Kevin, who deleted his whole YouTube channel over the weekend, which is very interesting, who bought a crap ton of shares at 1833. And it's really interesting for why this happened. Let me give a shout out to Bayray, who got some of this inside DD for us, showing us here since he's in his Discord. 82,358 shares, average price $18.83. Now, it's really interesting because Meet Kevin is a guy who's been on YouTube and has looked at stocks for a long time. He's known about Palantir for a long time. I mean, he could have bought Palantir anytime below $18.83. And it's not that he's, a bad investor for not investing below that price. It's what changed at 1883 that shifted this new approach that he had to the point where he dumped 1.5 million into the company, right? Like, what actually changed? Why didn't he do this at $10? And I think in that third quarter, something institutional investors realized and retail investors realized is that the company is starting to get on a trajectory of growth that is probably going to be broader than what most people think. Now, I don't know where the growth is going to top out at. I don't know if we're going to get to that 30% CAGR year over year. It's going to be stuck at 25. We'll see what happens. But I think someone like a Meet Kevin, who's similar to a lot of other investors, realized, all right, 1883 has now become somewhat a fair value of Palantir. If it goes down, then maybe it goes down to 16, 15, will DCA. If anything, it should probably just keep rising up into that 20s, and 20s becomes the new floor. Will that actually happen? We'll see. That's why today's price action is going to be really interesting around Palantir. Will the price action continue to rise and rally into that $20 range? And if we get into that $20 range, how hard will it be to come back to the $18 range? I think that's going to be really interesting, to see in terms of how Palantir ultimately returns and performs. And I think it's gonna be interesting. Government shutdown deadline November 17th. Yeah, so we got some other issues coming up, right? We have government shutdown potentially coming on November 17th, so we have to have a new budget bill to make sure that doesn't happen. On top of that, because we're talking about Palantir is now trading 22 times in terms of its price to sales, which is a little up there in the context of the market cap and also in the context of other software companies. The forward PE of Palantir is about 71. Average forward PE for a lot of these companies is around 23. And I saw a stat this weekend where I was just like, oh, this is very interesting. NVIDIA's forward PE is 42.7, CrowdStrike 68, and Microsoft at 32. So you got Palantir more expensive than NVIDIA, CrowdStrike, and Microsoft. And the reason they're more expensive is not by market cap, is by the lack of growth that is in relationship to the PEG ratio that's justifying the current market cap, right? So you're paying 74.7x for Palantir. You'd pay 42 for NVIDIA, which is why I think NVIDIA is holding this 450 level, because NVIDIA is actually, I was talking to someone the other week, I was like, NVIDIA is actually cheap if you look at their future growth, and they're going to report next week on the 21st. I mean, they're 485 right now in the pre-market. Look at that. I didn't even know NVIDIA got it in 480s. That's $15 away or $30 away from that all-time high. They hit 515 in the summer, but NVIDIA, at 42, CrowdStrike 68, Microsoft at 32, Palantir at 74. either Palantir keeps growing or either it's really expensive. And I think that the market's going to decide that over the next couple of days. And we're going to see where it goes from there. So that is the update on Palantir. We are seeing a little bit more green, or a lot more green, and we will, end up seeing where Palantir goes. Again, the final thing I want to say here on Palantir is that we're not going to get an update until Q4 of 2022 or 2024, which is like, 2024 is 2 months away, on how AIP bootcamps are going. If they don't show AIP bootcamp scaling, which I think is a very small probability, I think in large part it's going to grow and the conversions are going to grow, then I think that is another risk to the market. So for example, if the stock can't show, if investors can't see the perceptual value of AIP bootcamp scaling, not the actual conversions on the customers, but the scaling of the bootcamps itself. So if they did 70 in November, can they do 80 in December? Can they do 110 by February, right? Then I think also the market's going to be a little concerned about like this new good market strategy. Why isn't it working in the way that it needs to work? Because the only way the revenue growth goes back to that aforementioned 30% is if, those bootcamp scale and commercial starts getting to where it needs to be. And then here's the actual final thing I'll say on Palantir. I did an interview this weekend with a guy named Adam who studies Palantir's government contracts religiously. And one of the things he unveiled to me that has been confirmed with some people that I know that work in the defense industry that were kind of echoing this statement as I've been talking to them and conducting my own due diligence around Palantir's governmental contracts, is that the government pie for Palantir is substantial. I mean, we talked about close to $20-30 billion over the next couple of years that are going to be allocated until 2030, right? So the next 7 years that are going to be allocated around AI, defense, army, Space Force, et cetera. Now, is Palantir going to get $30 billion? No, that's not going to happen. But the idea that Palantir doesn't get a $2 billion contract on a random Wednesday in 2024, the probability of that is not as low as people think. And so as a result, I highly recommend people checking out that interview. It's called The Palantir Government Contracts You Don't Know About. We really go in depth. It's not like a fluff interview. It's like very in depth, the stuff that most people never research around what is JADC2, what is the Space Force, what is SOCOM, why are they giving out all these contracts? I'm starting to believe more and more the government is the thesis for Palantir, and commercial is just like a call option on top. Because if that's the case, then Palantir is going to be very, very Palantir is going to be in a really good situation. It's going to be in a really, really good situation over the next couple of years if they can win some of these contracts. Ricardo Flores, good morning. Good morning to you. The Bass Styler sub, bro. Do you think any big tech company is currently seriously undervalued? I think Google is undervalued. Google is trading at the lowest PE out of all the companies. I think it's a 28 or 22 PE on Google. Let me check right now. I think it's 28 if I'm not wrong. Microsoft's, I think, the probably the richest. Yeah, Google's at a 25 PE. Okay. Facebook's more expensive, even though the market cap is smaller. Nvidia's more expensive. Amazon's more expensive. Tesla's more expensive. All of them are more expensive if you just look on a PE basis. Then you look at Google and you kind of look at the thesis for Google and what it is in terms of, how it affects all of our lives. Now, the problem is Google is nowhere to be found in this AI ChatGPT type of race, even though I have some thoughts on these new custom GPTs. That whole OpenAI, remember last week when I discussed OpenAI Dev Day and I'm like, oh, these custom GPTs are going to take over the world. I kind of changed my mind on that, bro. After playing with these, I was like, this is not special at all. And so I want to talk about that after we do some macro stuff, but we'll get back to the Microsoft Google debate, because I actually have some updated thoughts on where that's going. All right. Our girl is back on CNBC. You know our girl. OG viewers of the Market Open, you know the girl I'm talking about. This is the girl that makes me smile in the morning when I hear her talk. Ladies and gentlemen, JP Morgan's Gabriella Santos is here to tell us why 2024 is going to be phenomenal. Let's get an update on bonds and where interest rates are going 2024.
Santos, JP Morgan, Asset Management Chief Market Strategist for the Americas. And just thinking about some of the things that you mentioned to our person that called you and begged you to come on this morning. The notion, the recent decline in yield.
Did you just hear that? Did you guys hear that? Joe said there's someone who begged her to be on. They know that I like her, bro. If they're begging her to be on, they know I like her.
That you mentioned to our person that called you and begged you to come on this morning.
Shout out to that person that got her on the seat. I love it.
The notion, the recent decline in yields sort of took off the table that 6 and 7% fear that we had. But that shouldn't mean that we're clear sailing either, because it could be here for a while. So unfortunately, equity investors, it's still all about what happens with interest rates.
Yes, unfortunately, it kind of all begins and ends with rates and the volatility in the yield curve. So I think what was helpful during the Fed meeting in November, during the Treasury refunding announcement that week, and with the jobs report, is that at least it took off the tail risk that yields could continue rising much, much higher. I think that was what was really paralyzing investors.
For good or for now?
I think for good, if you align with our projections, which is that inflation continues to moderate from here. We could be speaking by the end of the first quarter of headline CPI with a 2 handle, and then by the middle of next year, core CPI with a 2 handle. I also think in terms of the deficit and the interest cost discussion,
this is why I like hearing Gabrielle. I mean, she's whispering these sweet words in my ears, right? By next year, mid next year, we're going to have CPI with a core CPI with a 2 handle. I mean, look, I'll believe it when I see it. But if that does happen, markets are going to rally, and maybe it's not a reason to sell your stocks before the end of the year. But again, this is what we're all trying to figure out if that's actually going to happen.
There's a lot of that that's understood now. We got it. It's here to stay, but there's already a substantial risk premium embedded there in long end yield. So I do think at least taking off that tail risk was helpful. It allowed investors to come back in and take opportunities of more discounted valuations, but still for now, pretty limited to long duration, kind of mega cap tech, weight loss drugs, still pretty concentrated. I think what will be more helpful is in the weeks ahead and the couple of months ahead when we actually start getting conviction of exactly how much our yields going to drift lower. And that all really is about a discussion of the Fed closing the door for good on further hikes and investors actually taking into account rate cuts in the years ahead.
So you're asset management chief market strategist. Does that mean at this point you would tell people, if you have young people that like the stock market, are you insisting they extend duration and buy some bonds? Ron Barron's never bought a bond. I think.
Oh, is that what he said?
Yep, that's what he said on Friday. He never bought a bond.
I've never bought a bond.
Not one bond.
Can't you figure something out in the stock market that's going to do better than 5%?
That's his argument.
I just, if you're that afraid, that's what you need, a nightlight. If you go to bed every night, you need to keep the light on.
There are some
No, I've been saying that, bro. I said if you need to like just find 5% in the stock market, you're a little boy, right? You're not playing with the men. I've been saying that. Now, granted, if you have like $100 million getting 5% for like literally doing nothing, if you're super rich, I get it. I understand. But still, you're a little boy. I don't care how much money you have. You're not playing with the big boys. You're not playing with the sharks in the ocean.
people who need fixed income for
you need,
as you get
but
older,
you can get the return of your money. I guess it's important. But when we see the Dow go from 800 to 30,000+,
and I will say Buffett basically says the same thing.
Yeah, I agree. I just 5%. That's the best you're going to get is 5%. And then if rates continue to go up, you're not even going to get that unless you wait till the end.
So I think if you think about the growth area of your portfolio, where you're really going to compound your wealth over time, that's absolutely going to be risk assets, of which equities is the main one.
But bonds are risky too.
Well, bonds have shown to have some higher volatility than we got used to there for 15 years or so, but they still have less volatility than stocks do.
Sure. A 30-year might not.
And if you think about actually the role that bonds play, it's about income. It's not about growth in the portfolio. And it's about, keeping investors invested in the stock market when you actually do get that 10% correction once a year or that 20% correction every once in a while. At least you have a little bit of a ballast somewhere else in the portfolio.
Right.
And not when it's about inflation fears, as we discovered last year, when it's about growth fears. And it's natural. We'll start at some point talking about a real recession fear again. So absolutely, the growth piece of the portfolio are stocks, are high yield bonds, or growth year bits. But we do still think you can have a decent role for bonds in income and some ballast in the portfolio. But the thing is, it's not cash, right? Which is where we see a lot of investors looking at the moment for that income, that ballast. Who knows where we'll be 6 months from now, 12 months from now. So really, the biggest risk we see next year and beyond, it's a reinvestment risk. And so there's a need to start extending a little bit the duration there to at least capture that income benefit for a little bit longer.
Dude, if you went on a date with Gabriella and she asked you about your portfolio and you said, oh, yeah, I'm 80% in 10-year bonds, she would walk out right there. She would pay for the bill herself. She'd be like, I'm paying for this. And yeah, this is not going to work. Like, literally, that's what happened. That's the type of personality she has. She would call you a little biatch if that was your investment strategy. And that's why I like Gabriella Santos. I mean, look, at the end of the day, her argument as well for like why you're staying in bonds and getting this crappy 4.5%, 5% return is a bad argument, is because she's saying that inflation's coming down. I mean, she's been saying this since August. And yes, I know inflation's been a little sticky in August and September. We had 3.7 on the headline. We're going to get the next update tomorrow, I believe. Let me just confirm when the next CPI date is out. I believe it's tomorrow. But the point is, if inflation's coming down, that is when you need to take a risk. Yeah, November 14th, tomorrow. So tomorrow we'll be live. We'll be starting 8:20 because 8:30 comes out. So 8:20 we'll be live tomorrow. Like if inflation's coming down, if it's not as sticky as it was, you know, it's not 10% like it was back in June of 2022. Assets are going to start to re-rate themselves like we're seeing already in the stock market. As inflation comes down, as the 10-year starts to move down, I'm looking at the 10-year right now going into some more macro. 4.68, it's up a little bit, but obviously it's down dramatically from 4.9 or 5 a while ago. And so from a macro perspective, she's looking at a lot of things going well. Q3 earnings were phenomenal for companies. Big tech, and we'll see NVIDIA next week. Big tech smashed it out of the park. I mean, I don't think we could have asked for better big tech earnings. Inflation starting to come down, 10 years starting to come down. There's like a crap ton of money on money market funds. There's $62 billion that were added last week. So now there's $5.7 trillion there. That money eventually is going to find a home. It's not, as she said, the cash that investors are trying to get a return off of. It's eventually going to need to find assets to be allocated to. On top of that, what's also really interesting is that mutual funds have to rebalance in the next couple of weeks, which means fund managers also have to allocate capital because that's what they get paid to do. They don't get paid to just hold there and sit on cash, even if you're getting a 5% return. If they're getting a 2% carry or whatever fee they're taking on all the profits, they're getting paid to like allocate the capital, find companies, put that money in those companies and make sure those companies produce a return. So you've got a lot of catalysts coming up towards the end of the year. As long as we don't have some crazy, inflation data event or anything come up, we should have really good earnings, and we should have really good macro results towards the next couple of months, at least in the words of Gabriella. And we should see something happening. I mean, like at least when you hear her perspective, and then when I listen to the bear perspectives as well, the bear perspectives are just like the 2-year, 10-year inverted, so there has to be a recession. It's like, okay, it's like I don't know if that's necessarily the best analysis for why like the market has to break, and maybe the market will break. But as of now, I mean, that analysis seems to make a little bit more sense for me. Benny says, I think NVIDIA earnings will decide how the market ends the year. Yeah, and NVIDIA is cheap before earnings. I'm not saying buy NVIDIA, but I was reading an article about it from one of these investors who was doing a numerical breakdown that NVIDIA is freaking cheap. If they can just kind of hit their projections on earnings numbers, which they're going to because the past 2 quarters have been amazing. We haven't seen AI spend or GPU demand slow down. They're going to hit their numbers again. And they're going to continue to do well. The problem this week would be the government shutdown fears. Yeah. And look, I think because we have that new Speaker of the House, I don't think, at least in the United States, that government shutdown fears are going to be that dramatic, but those fears are there. And that's definitely not going to be good for the market if we can't come to a resolution. On top of that, we've got oil prices coming down, which just is another reason that proves Gabriella's point. Look at WTI crude today, $77 a barrel. I saw oil in New Jersey. I saw gas at $2.99 for the first time in almost a year and a half today. I know a lot of people in the Midwest saw like $2.75, $2.80. This is the first time I saw below $3 in literally a year, maybe even a year and a half in the United States or in New Jersey. So I was really surprised when I saw that. And that to me is another signal for disinflation is starting to come down the drain. We haven't even talked about AI leading the deflation rally as well from a macro perspective with all these companies and, putting up their numbers. So there's a lot of catalysts going into 2024. I would start to say I'm starting to get a lot more bullish. The parts I'm still trying to research is this idea that a recession has to happen, which is the bears claim, and that credit ratings, are not necessarily the best. And speaking of that, let's transition to Moody's. So on Friday after hours, of course, we got a credit downgrade because I think there's some forces that shall not be named that are trying to tank the U.S. economy. Moody's was in a bad mood. Moody's turned negative on U.S. credit rating draws Washington in a bad situation. Moody's on Friday lowered its outlook on a U.S. credit rating to negative from stable, citing large fiscal deficit and a decline in debt affordability, a move that drew immediate criticism from Joe Biden. The move follows a rating downgrade of the sovereign by another ratings agency, Fitch, this year, which came after a month of political brinkmanship around the U.S. debt ceiling. So this wasn't really news, and the market went down a little bit, but the market didn't react that badly to it. The market reacted worse in August when we got the downgrades from Moody's, Fitch, and S&P Global. We already know that the U.S. is in a ton of debt, right? And so, like, to big more of a little bearish case, to give the bears some credibility here, the U.S. is in a ton of debt. We're printing a crap ton of money, even though we're doing a lot more quantitative tightening as well. M2 supply is, starting to stabilize, but obviously when you print $7 trillion in 2020, eventually there's going to be some ramifications for that. As a result, Moody's, which is this credit agency that somehow has credibility across the entirety of, the United States, they made a decision, and they made a decision back in July that we are not going to say U.S. debt is in the right situation. A quote from chief economist at Naxos says, "It is hard to disagree with the rationale with no reasonable expectation for fiscal consolidation anytime soon. Deficits will remain large, and as interest costs take up a larger share of the budget, the debt burden will continue to grow." And I think that's like the key thing everyone needs to realize. If interest rates continue to remain high, we are paying, close to $600 billion just in interest payments this year on our debt. That is another catalyst for why interest rates have to come down, because at the end of the day, right, in going into an election year, I don't think Jerome Powell is going to let the United States pay that much in interest. That maybe he does, but it all hinges on how sticky is inflation. And from all the data we're seeing, inflation is very sticky. So what does this mean in the context of the U.S. credit rating? Yes, we have a ton of debt. Yes, we're spending like drunken sailors. Yes, we're getting involved in all these wars and all this stuff, and it's pretty dramatic. However, if inflation's coming down, which inflation went up dramatically for the first time since the 1980s because of a global pandemic, whether we like it or not, that's what triggered the need to print all this money. Was it probably bad to print all this money? Yes, but now we're done. And we got to solve the problem. That is what caused inflation. It's not like inflation randomly, inflation was pretty stable for a long time. It's not like it randomly went up. It went up because there was a pandemic and we printed too much money. As we start to correct that, and we see inflation come down, again, it was 10% in June of 2022. Now it's 3.7. I think it'll come in at like 3.3, 3.4 tomorrow. It's going to, and Gabriella says it's going to be a two-handle by mid, 2024. We're going to start to see the need for interest rates to be high not have to be high anymore, which means if interest rates come down, regional banks start to do well. Banks can lend out more capital. People are feeling more entrepreneurial. They'll take more risks. They have the ability to loan more money. There's better interest rates on cars, so you don't have to pay $1,000 a month just to buy a Honda Civic. Like, a lot of the economy is going to start to get better. And as a result of that, maybe we won't have to print that much money. And maybe our debt won't be in as bad of a situation. The problem is we're spending like crazy. And this is where I'll give the bears a good argument. It's like, look, we are spending way too much. And because we're spending way too much, you can't disagree with Moody's decline on their logic for our decline. Their logic for our decline is simply that our debt is insane. However, final thing I'll say on this is that we have the best debt in the world, right? Like, do you want to really own Chinese debt? Do you want to own Russian debt? Like, no, you want to own United States debt, which is why Google, Tesla, Snowflake, Datadog, Palantir, Ginkgo Bioworks, let's not talk about Lucid or AMC, Rivian, the S&P 500, Robinhood, all of this, the S&P 500 being the index, all of these companies were in and made in America. Like, the best companies in the world, the public equities people care about, the companies that people want to take a risk with their capital, they're from America for a reason. And I think from a broad claim going to this Moody's downgrade, they can downgrade us as much as they want. There is no country in the world that has the democracy the United States has, that has the economy the United States has, that has the entrepreneurial tendencies the United States has, that has the military the United States has, and that ultimately has the ability for us to solve the problems we have, like the United States has, through entrepreneurship, through business, etc. That doesn't justify us printing money like crazy. And I understand why Moody's is downgrading us, but it also is like, all right, you downgraded us. Great. Whose debt are you going to go buy? Do you want to go buy the Saudis' debt? Like, go ahead, go buy their debt. And so for that reason, I don't think the market is tanking that much on that decline. But obviously in the summer, when we got declined for the first time in a while, the market was not happy. 439 on the S&P 500, down a little bit. Palantir going to be very interesting to see their run up. 1955 down 0.61%. Again, we're at 1950 for Palantir. Massive run up after earnings. Today is going to be really interesting. It's going to be the first day post $19 to see where the market, does the market sell it off? Do people be like, all right, I got to take some profits here? Or does the market say, you know what, this bad boy is going to the moon. Let's pick up some more shares and see where it goes from there. Tesla at 216 in the pre-markets as well. Let's see what we got in the comments. Austin, what's up? Thank you for being here. We got Midwest complimenting my eyebrows. Midwest, thank you for the compliment on my eyebrows. Kelly says they literally do not exist. He has won the brow game. You know, it was funny. All throughout high school, I didn't get my eyebrows done. And my eyebrows were just like a big bush on my eyes, or like above my eyes. And I mentioned to my mom, because she used to get her eyebrows done. I was like, Mom, should I get my eyebrows done? And she was like, stop being a bitch. I can't make this up. This is what my mom said. She was like, no, guys don't get their eyebrows done. And so I listened to my mom. Artish here. I talked to you over the weekend, bro. Thank you for all the advice you gave me over the weekend. $4.99 super chat means the world to me, man. Hope you're doing well. And thank you again for the advice over the weekend. Means a lot. She literally told me to stop being a bitch. She was like, only guys get their, like, like, you see all this hair on my arm. At one point I asked my mom when I was in 5th grade, because I had this hair when I was in 5th grade, because I'm Indian and it's the hair grows like crazy. I was like, Mom, I think I should like shave my arm. And she was like, stop being a bitch. And it's like all my life, my mom has told me of my absurd hair growth, like just stop being a bitch when I say I should tame it down. That when I finally got to college, I was like, you know what? I'm just going to like get my eyebrows done and see what happens and see how I feel. And I wish I had done that in high school. And I got my eyebrows done and I didn't feel like a bitch. I felt great. My eyebrows looked great. It was not bushy anymore. I didn't have a fucking unibrow. And so sometimes the moral of the story is like when your mom's saying you're a bitch, you got to just take a risk. And maybe you end up being a bitch, but maybe you end up like looking nice. So you're not too bad. Mark says he wears a bearskin rug on his arms. That is true. I do. All right. 735 people here. Thank you for being here. We've got 9 minutes until the market open. It is Monday morning. We got to kill this week. November 13th. Got 2 months left until the end of the year. Let's talk a little bit about Google and Microsoft before we get into the market open. Again, thank you all for being here. I am incredibly blessed for you all spending your morning with me. So Microsoft last week announced something called, OpenAI announced something called custom GPTs. And I was kind of goo gaga over it, right? As soon as it came out, I was like, oh my goodness, this is going to change the world. This is going to be one of those paradigm shifting products that fundamentally change the architecture of how people engage with the information revolution. You can now build your own version of ChatGPT. And essentially the idea that Sam Altman developed or demoed was that, okay, ChatGPT is super big. It's a large language model. You can take your own data, you can put it into ChatGPT, and now boom, you have your own custom GPT, right? And I thought like, oh crap, this is going to change everything. Microsoft, and that's why Microsoft was up, right? Microsoft basically at all-time highs, 362. And I was like, this is going to be a game shift, a paradigm changer when it comes to how we think about technology and how we think about how people are going to use it. And I kind of have fundamentally changed my mind. So this is the tweet I saw over the weekend. I'm just going to say it. Custom GPTs are lame. It's just a fancy system prompt. And I started thinking about it. And I think this is very important for also, it implicates AIP as well. It implicates the consumer side of all these tech products. I kind of agree with this, right? So this was my thought. I said, I'm not going to lie, I'm feeling the same. Custom GPTs just feel like someone who didn't want to prompt ChatGPT better. Remember, custom GPTs are ChatGPT. They just have some more data involved in them that's like altered in a different way, whether it's like a chef or a lawyer or a doctor, a therapist, whatever it may be. So I said, I don't know if this is an Apple App Store moment, which is what everyone thought last week. Custom GPTs do make sense to me when the community being served is incredibly niche, and the data it's being trained on is very difficult to obtain. And like, that's when I think the marketing and distribution side of it makes sense. So for example, let's say a lawyer wants to create a tax advice GPT. Even if there is a massive market for people needing tax advice, I'm not sure what makes the tax advice GPT stand out amongst the millions of other custom GPTs. Now, if that lawyer has 1 million followers, so let's say Jessie, the lawyer, has 1 million followers and she's put out thousands of videos and she wants to train a custom GPT on all of those transcripts from those videos, she can do that. She can make her Jessica GPT, lawyer custom GPT thing. And then she can sell it to her followers for like $2 a month. And then those followers, instead of like having to DM her saying, hey, can like we get your advice on this, blah, blah, blah. They just ask the custom GPT, like the large language model that's trained on her, but powered by OpenAI. And then it gives her the answer, right? The reason that makes sense is because there's marketing, there's distribution, there's a niche community, and there's people willing to actually pay. I think the GPT store is going to be flooded with a crap ton of GPTs, and it's not going to seem like there's any key differentiating variable between any of them. which is different from the App Store. The App Store creates rich experiences within different apps on your phone. You open an app, you can get into TikTok and Instagram and Twitter and YouTube and HBO and Netflix and all these different experiences, not to mention all these games and these platforms that people like creators can build their livelihoods on top of these apps. I don't know if custom GPTs, if I'm going to go to a custom GPT store, right, and I'm just going to be like, oh, I'm going to search for something and I'm going to download it and then I'm going to use it. Because a lot of that's going to happen on desktop, right? Maybe it happens on your phone, but I see a lot of the use cases on desktop. Number two, what is going to be the difference for why out of this tax advice GPT or this tax advice GPT, I pick that one? I don't know. I think the only reason I would pick this tax over this tax one is because I consulted this lawyer before. I follow them on Instagram. I know about them. And because I know them, I'll download their GPT and maybe I'll pay for it. Whereas on the App Store, you're willing to try any app, right? And those apps can become rich experiences that fundamentally have network effects around them. I don't think custom GPTs have any network effects in terms of the actual GPT, because even if a lot of people are using it, there's no interaction, there's no social, there's no community. It just doesn't seem as big of a deal as I thought it was last week. And I would love to know what people say in the chat. If you're a doctor, you would want a custom GPT that specializes. I agree. My question is, why would hundreds of millions of people, which is the bull case for apps on the App Store, right? Literally, some of these apps are, PayPal is number 48 on the entire App Store, and they have hundreds of millions of users. They still add a couple 100,000 users every month. The App Store it's big, right? And we're talking about Google and iOS. There's basically infinite growth. You can, Facebook is still number 10 in iOS apps on the App Store. Facebook has almost 4 billion. How are they number 10? How are more people still downloading it? Because there's more people with phones, right? It's infinite. I'm trying to think, is custom GPTs a moment where hundreds of millions of people will download that Dr. GPT? I don't know. I just don't think so. It doesn't feel as exciting as I thought it was before. So, Amit, what's up in the chat? We'll see if it does become something like that. But as of now, I'm unconvinced. Maybe I haven't found the right GPT. I have an idea around custom GPTs and I have my own thesis around them. But I just don't feel super convinced that I'm going to download a bunch of random ones and start using them. Cause Why Not is honestly a pretty good take. I would love to hear some disagreement in the chat. I would love to hear people that disagree. For those that are just joining the conversation, is Microsoft's custom GPTs at all an iPhone App Store type of moment in terms of the democratization of hundreds of millions of people creating these GPTs and then downloading and using them as well? The other thing I'll say here, and this is the other point I wanted to get to 3 minutes until the market open, Google, where the hell is Google? Right? Even if this thing is not a big App Store moment, where is Google? Where is Gemini, which is Google's project around kind of open sourcing the development process of GPTs or large language models, Bard, etc.? Where is it? Because Google should be the platform. Google should be the App Store. Google should be the operating system for how people engage with LLMs. I don't know how many people use Bard anymore. I use it sometimes, even though it's inaccurate. I asked Bard, how many Palantir customers are there? And it was like, we have 2,000 customers. I'm like, no, we don't have 2,000. I would be really happy if we had we have 453. We don't have 2,000. And Google, you're indexing the web. How do you're supposed to know this? Bard should know this stuff. And it doesn't. So I think Bard still hallucinates a little too much for me to use it constantly. But why aren't people making a ton of custom Bards? Custom GPTs sound way better, I'm not going to lie. But, where's Google? They got to come out with something. And so them not being in this race, I think, is actually really interesting. However, I think if that means Google tanks more, I'll welcome that, because the valuation decline on Google at 1.6 trillion, if it gets to 1.4, 1.5 trillion, I would gladly buy that dip. I really don't think that Microsoft with custom GPTs is a reason to be scared for Google by any sense of the imagination. Google search is still everything. I mean, everyone still uses it at the end of the day. So until it gets disrupted, I don't think that's going to necessarily be the case. And after the market open, we'll look at Kathy's take, because Kathy over the weekend had a take on the death of Google. Essentially, she thinks it's gone. And either Kathy's going to be right or she's going to be wrong. Either Kathy is going to be right that Google's not going to perform in the next 5 years and they're going to die out and LLMs will take over, or she's going to be dead wrong. I kind of think she's going to be dead wrong. And I think her thesis of investing over the past 2 years has pretty much shown she's been dead wrong on every tech company she picked outside of Tesla, which she picked, 10 years ago. If she had just picked big tech, she would have returned multiples for her show. If she replaced every company she has with big tech and bought it in January, she would be up a lot this year. So I don't necessarily know if her take is the right take when it comes to Google, but we'll see what she has to say. To be fair, Microsoft just started this. The original iPhone store had terrible apps, like a popcorn app had a different calculator. It's not about the apps being bad. I'm thinking of the actual use case of the App Store for custom GPTs in general. We barely use apps on our phone every day. I mean, all of us have maybe 5-6 apps we go to every day. When's the last time you downloaded a new app? Are you actually going to download multiple custom GPTs every day and then use all of them in multiple different use cases? I do not think that's going to happen. I think people will just prompt ChatGPT better. They say, hey, ChatGPT, imagine you're a lawyer versus downloading the lawyer GPT. I just think there's too much work and friction even involved in that process. So maybe I'll be wrong, but we'll end up seeing how the growth of custom GPTs plays out over the next couple of days or over the next couple of months. All right, folks, Monday morning, 810 people being here. Thank you so much for being here. It is 9:30 a.m. We are back on Monday once again with the stock market having to open. Ladies and gentlemen, thank you for being here. The stock market is now open. Wake your ass up. It is Monday morning. We've got a world to conquer in whatever niche you are trying to conquer it in. And it's time to see where the market goes. All right, Google, 131, down 0.46%, 131.95, nothing too crazy. S&P 500, 439, not too bad, down 0.28%. Tesla, 216, it's up. Again, Elon Musk promising FSD 12 is going to be in 2 weeks. We'll see if it happens. But Tesla's up at 216. Palantir, 1959. So this is going to be the interesting stock I want to look at for the next 30 minutes, along with, as we go through the market, because it's at 19. It's at 1950. I mean, it's up there. It is there. Palantir right now, 1948. We'll see where it ends up. Either the market's going to say, you know what? It's getting up there. It's too expensive. 22 times price to sales. We're going to sell. Or the market's like, this is a good price. We want it to consolidate at this $19 to $18 level, and we'll see where it goes from there. So we'll check back on Palantir, but Palantir right now, 1948, down just a little bit to start the morning. Ginkgo Bioworks, Kathy bought more shares. She's going to keep buying shares, up 3%. I'm getting a little interested in Ginkgo. I'm not going to lie. At this price, if it gets down to like 114, 115, the 52-week low was 112. I probably would buy like 1,000 shares if it gets down to 115. But at 130, I'm still I don't know. It's in 130 to 115. There's not that big of a difference, but it is getting a little bit more exciting. I mean, do we think in the next 5 years Ginkgo is like $2 or $2.50 and then it doubles, right? Like, do we think that happens? I think that does happen, but still a little concerned because that earnings was not good. So not pulling the trigger yet on Ginkgo. Lucid down 377, AMC 789, Ethereum 2071. Where's Bitcoin? Bitcoin back down to 36,863. Bitcoin was at 37.8 over the weekend. Now 36,874, still in the mid 30s range. So Bitcoin has defied all odds, and it has come back from that 20,000 range or 24,000, and now it's stuck in the 30,000, and we'll see where it goes from there. Coinbase Green down a little bit, 92.91. Robinhood 822. Still bullish on Robinhood at these prices, folks. I still think Robinhood's a great buy right now at 822. $7 billion market cap, $5 billion in cash. You're paying $2 billion for a brokerage that is gap profitable, if not for a regulatory fee. Liking Robinhood at these prices. NASDAQ 13,739. Not too bad for the day. Barely down about 0.42%. SoFi 682. SoFi's got some work to do. SoFi's been stuck at this level at 670 to 680. At least it's not down in the 660s. We'll see where SoFi has to go. Again, last week, Anthony Noto and Chris Lapointe, CFO and CEO, bought a ton of shares. Well, not a ton of shares. They bought 60,000 shares collectively, while the CMOs, CRO, and some other C-suite started selling half and 33% of their positions, which was pretty annoying. So we'll see if Noto starts buying some more. Maybe when he buys, he starts buying in bulks, and we'll see if he ends up buying more. I think the biggest risk to SoFi right now is the risk of delinquencies, the fear of a recession, the fear deposits are going to decline, that member growth is not going to keep up. If we're in a bad environment, interest rates are going to come down, which means how will SoFi be able to acquire customers at that 4.6% APY? I think a lot of those concerns are not that valid, but they are concerns that are out there, and those concerns are what's tampering the price right now. Or quite frankly, some hedge funds are just shorting the crap out of this because they want to get even better prices because that earnings was so good that they want the sucker at even cheaper prices. So, I mean, we'll see what ends up happening, but we do have a pretty red market as we get into the market open. Well, it's red, but not this bad boy. Look at that. Palantir, 1982. She's running. She continues to run. The market continues to be excited for Palantir. They're not thinking that it's overvalued. And as we see that, Datadog and Snowflake are also up at the exact same time. This is probably why we're seeing a little bit of Palantir run. And now Palantir just turned red a little bit, 1965. Datadog's 104 is up 30% from last week. Snowflake up 11% from last week. If Datadog and Snowflake continue to be green, Palantir's probably can continue to be green as well. I mean, all of SaaS is seeming to get a little bit of a premium right now from the market. Apple, look at that, 185. Meta at 327. Meta at 52-week. Meta 52-week high was 330. So you're basically at 52-week highs on Meta. You've got Enovix at 1024, Rocket Labs at 430, United, American, Delta, they're all down today, just a little bit, 30 733 and 11. SMCI 262, TSM at 96. AMD also ran heavy on Friday at 117. We're seeing some semis and some different companies start to break out a little bit more, where we're seeing Palantir will break $22 this week. I mean, it could happen. It could, if the momentum continues, it could happen. I don't think 22 would happen because that would be pretty insane. But then again, 1950 was also insane when we were at $17, and here we are. Again, for people wondering why this run is happening, I think there's two reasons. I think number one, the market sentiment has shifted after AIP, after Q3 earnings, where they kind of showed where AIP was growing, the trajectory of growth it's on. Obviously, we saw a lot more pilot growth in terms of the number of boot camps they're doing, which is super important. NHS contract updates, that's important. A lot of people think the NHS deal is in the bag and it's going to be announced. And then on top of that, you've got people starting to buy. We talked about in the beginning of the stream, Meet Kevin bought 80,000 shares at $18. The reason he's buying it is because he's excited and he thinks that there's probably a shift in the market when it comes to Palantir. And so dips will be bought now. Imagine Palantir goes to 17. It's going to get bought up. People are going to buy the dip, right? If it goes to 16, people are going to buy the dip. I know I'm going to be buying a little bit more, right? I mean, really, my buy price is 15 and below. So we'll see how dramatically it goes down. If it goes down in a day, I'll see the situation when it happens. But you're starting to think 15 to 16 is real fair value for Palantir, given the momentum we've seen in Q3. And on top of that, they're 4 quarters of GAAP profitable in a really tough environment to be GAAP profitable. And that's going to influence S&P 500 inclusion. I think the $19 price is a little up there, given some of the growth we've seen. I think there needs to be a couple more quarters of growth to really get into these prices. But the market's giving a little bit of premium right now, and we're going to see if it holds. Disney at 87.55, Uber at 51, Uber going up a little bit after their earnings. Adobe, this is one of the best performing stocks this year, 589, market cap of 262 billion. This one's just absolutely killing it in the AI revolution. Enphase still stuck in the 70s, $76, Celsius 171, Airbnb 118, Netflix 446. Look at Netflix, almost touching 450. Absolutely phenomenal. Pinterest 31, they're still up 20% after earnings. Elf 95, Nvidia 485. Nvidia's earnings next week. And Nvidia kind of closing in that $490 range, which we'll see if it can get there as well. S&P 500 at 438, down a little bit on the day. Everything is indeed red. Everything is indeed red. Ricardo says, yeah, tax here is 28%, so no point in trying to time it. That's another thing. If you sell your stocks, you're going to have to pay some taxes, and that's not fun. So that's another reason for why we don't want to necessarily get rid of some of those winners if they are bona fide winners, if they're actually going to win. Where's Microsoft? Microsoft was hitting all-time highs last week. Microsoft, look at that. Wow. Microsoft at 367. Microsoft, so the 52-week high on Microsoft I thought was 366. It's actually 370. So on Friday, it hit a new 52-week high. I didn't even notice. Now it's at 367. Microsoft, 2.73 trillion. This is where, you have to really ask yourself a question. Like, do you think Microsoft at all-time highs is sustainable at this level? And remember, people tend to forget Microsoft got to 315 back in 2021. Guess who sold a crap ton of shares when Microsoft was at 315 in 2021, which was the top for Microsoft before they went down to below 200? Mr. Satya Nadella. Mr. Nadella sold a crap ton of shares at the top. He timed it perfectly. So I think that's one of the things to look at as well. CEO of Microsoft, is he selling? Is he planning on any sells? I would have to guess no, because what's different from 2021 is the inflation narrative is gone, right? All those interest rate hikes are likely gone. We did all the crap we had to do in the economy and to make it better. Like, we did all that. And then on top of that, you've got an AI narrative that's actually real. So you've got two things working for some of these tech companies that are at all-time highs to continue going higher, even though, you are taking a little bit more risk buying them, but maybe your risk is mitigated by these two things. Number one, inflation is coming down, which is going to be good. Cost of capital is going to go down, which is going to be great for these large tech companies. And number two is AI is real, and Microsoft is showing that there's actually real gains to be made with AI. If that's the case, there's no new sectors of growth, new ways that they can grow, and if they can put up the numbers, then the market's going to reward them. The question is that, an all-time high, are you willing to take that risk? And I think that's why I always go back to Palantir, right? When people say, why Palantir over Tesla? I'm like, well, Palantir is at 40 billion. I think I can get to 400 billion in the next 10 years versus Tesla going to 7 trillion. It's just, and maybe I'm just not as bullish as I need to be on Tesla, but that's kind of why I go back to Palantir. It's one of those tech companies that is, the valuation in the broad scheme of things is probably cheaper than a lot of other tech companies. And the growth is probably a lot better over the next 10 years, hopefully, than some of the other tech companies. SoFi 667, 675. So we're back in the 670s. Robinhood 817. It's a red day. Why are we red today? Moody's downgrade. We got the 10-year going a little bit higher from 4.5. We've got well, oil is actually down. So inflation, we got CPI tomorrow. So I guess we're a little volatile in terms of what's going to be with CPI tomorrow. We're pretty much all red. The only thing that's green is Ginkgo and Airbnb. Other than that, we're all red. Even if it's a little bit of red, it's all red across the board. So yeah, I think the Moody's downgrade and the instability around CPI tomorrow, along with that 10-year inching up a little bit to 4.6, is probably what's pushing the markets a little bit red today. SMCI is dumping. Where's SMCI? How bad of a dump is that? This is in the semi space. Yeah, it's down 2.6%. Not crazy, but it is down a decent amount. Let's get an update on why interest rates might be as early as March, and let's get a little bit more of a bullish take for why we think interest rates. I mean, most analysts are projecting May. This analyst thinks March is very likely.
Now, on the week ahead for the markets is Subhadra Rajappa, who is head of U.S. rate strategy at Societe Generale. Also covering the equity side of this is JJ Kinnigan. He is CEO of IG North America. And welcome to both of you. Subhadra, I just want to start with what's happening with the markets. Volatility is definitely the name of the game when you're looking at the bond market. And what Powell said last week at the IMF sounded a lot different than the interpretation we'd had before that. What do you think's going on?
Yeah, no, he's definitely walking back the dovish interpretation of the market after the FOMC meeting last week, or I should say the week before. And what you're starting to see is that there's concern in the Fed that financial conditions are easing too fast, too soon. We saw a 50 basis point rally in 10-year Treasury yields and 30-year yields in a very short amount of time. Mortgage rates came down from above 8% to now below 8%. They just don't want financial conditions easing too soon, because tightening of financial conditions is what's doing the Fed's job for them. As you mentioned, Becky, we're getting CPI this week. Core CPI is still going to be north of 4%. They just don't want the market to start interpreting this as being dovish in any way, because they want to keep their optionality open to hike more if needed.
And JJ, obviously, all of
and this is very true, right? That's why Jerome was pretty aggressive when he was talking at the IMF. He was trying to say, like, look, inflation's not in the best situation. It's going to be bad. It's going to be more sticky. Because when you saw that 10-year go down 500 basis points to 4.5, which is probably why it's up today at 4.6, Jerome wants to calm everybody down.
This impacts equities too, because equities are kind of getting led around by the nose by what's happening in the bond market. What do you tell retail investors at this point?
Well, I think what was really interesting, Beck, is last week, for the first time in a while, we started to see people have a little bit more conviction and start buying a lot of the individual names. As we've talked before, when people are uncertain, they stay to the indexes and ETFs that are related to indexes. We finally started to see people, the other 493 stocks in the S&P 500 actually had something to do last week.
Is it false, though? Is it a false signal?
I think I would say it's a signal you have to be a little bit careful of. But what was interesting to me is I look at the stocks our clients bought last week, the top 5, 3 of them were right near 52-week lows, that being UAL, Ford, Newmont Mining. Okay. So I think what is starting to happen is people are, and Eli Lilly being another one. So they're either going for stocks that have done very well, that continue to be quality, or stocks that are getting beaten up. And for the first time, people are willing to take a chance on bottom fishing a little bit.
Well, Subhadra, that sounds like something you would do if you think the Fed.
Now, that's very interesting, hearing him say that, because the Russell 2000, which is the index of more small cap companies, is not going up as much as you would expect it to go up, given we're seeing a little bit more momentum rally. And the reason for that is because a lot of people are still afraid that if inflation is sticky and interest rates don't come down as aggressively as they need to come down, the Russell 2000, right, this index of small cap companies are going to be hurt the most, because these are the tech companies that actually need to borrow capital. Cost of capital is higher. It's going to be much more higher to get them. So the idea that this fund manager is saying his clients are nibbling at some of these more value plays at 52-week lows is a signal for where they ultimately think why and when rate cuts are going to come. Now, on top of rate cuts, we have to discuss this, because this is very, very interesting. I read a phenomenal article this weekend that I'm going to share after this and talk a little bit about. President Biden is meeting Xi Jinping, the president of China, on Wednesday. Here's an update on this, and then I want to do a little bit of analysis of what this means for the U.S. equity markets.
Going to be meeting with President Xi in San Francisco. That's going to happen on Wednesday. Eunice Yoon's in Beijing right now, and I want to get a sense from her of what we can expect at that meeting. Eunice.
Thanks, Andrew. Well, this will be their first meeting in a year, and there's obviously no shortage of issues that are going to be on the table. The Biden administration has expressed that communication is key. the White House National Security Advisor, Jake Sullivan, had said that President Biden would seek to reestablish communication, especially when it comes to military exchanges. The other big issue, of course, is going to be help with Russia as well as Iran in the conflicts in Ukraine, as well as the Mideast. That was also articulated by the Treasury Secretary, Janet Yellen, who had met with one of her Chinese counterparts, talking about how she had hoped that Chinese companies would not be assisting Russia in its efforts in Ukraine. Another big point that the Biden administration is expected to bring up is the enforcement by the Chinese on exports of fentanyl ingredients to the United States. Now, for the Chinese, a lot of it is with the backdrop of a slowing economy, that President Xi would be walking into the room after his vice premier had already expressed to Janet Yellen the desire by the Chinese for an easing on export controls, sanctions, as well as tariffs. There is an expectation that there could be a push by the Chinese for an expanded dialogue on AI. Though skeptics here have said that this also might be a way for the Chinese to delay U.S. restrictions. And then finally, the Chinese have been expressing that they want some reassurances on Taiwan.
So China wants a lot, okay? And this is why I brought this up, because this is going to be really interesting to kind of see how this goes. I mean, what happened over the weekend, I don't even think people recognize, or you guys might have just not seen the updates. In San Francisco, where there's a ton of homeless people, and on some of the main streets where there's just like tents and homeless people and drugs and all this stuff, all of it's cleaned up. All of it's gone. It's all been barricaded. It's all gone. Why is it barricaded? Why is it gone? Because Xi Jinping is coming to San Francisco, and the California government does not want to show a really crappy street where there's a ton of crime and where there's all this stuff going on to the leader of China, because we got to impress him. He's the leader of China, and he's meeting Biden and Xi Jinping in San Francisco. Now the question here is, why are they coming to San Francisco? Why are they coming to San Francisco? And this article right here that I'm going to share in the chat, this article is one of the best articles I read really in the past couple of months. This is by Balaji. He was the former CTO at Coinbase. I'm going to put it in the chat if anyone wants to read it. It's a long article. Only Newsom can go to China. Gavin Newsom, people don't know this guy, Gavin Newsom, who's the governor of California. He went to China a couple of weeks ago. He went to Beijing. He met with Xi Jinping. Why did he go to Beijing? Because it's very obvious that after Joe Biden, I don't know if he's going to win or not in 2024. We'll see what happens. But he's the next runner-up. He's the next guy the Democrats are going to make the next president. And by the way, Xi Jinping knows that as well. He knows that he's the aforementioned prodigy of the Democratic Party who's going to be, the next up to run for president after Biden is done. And he's playing his role correctly, right? If Gavin Newsom actually was like a fighter, he would probably go against Biden, but he's sticking with the establishment. He's making sure that Biden gets to do what he wants to do. The establishment probably told him, hey, sit down. You're not running. Let Biden finish his role. Wait for another 4 years. You'll be fine. And so he's waiting another 4 years. Now, why is he meeting with Xi Jinping? That was the entire point of this article. This entire point of this article was why the Democrats are becoming friendly with the communists. And this is not to get super political here, but it's a very interesting analysis. It takes a historical analysis of why Democrats have been friends with China for a long time, even more than some of the right wing, some of the Republicans, and ultimately why they're trying to form a coalition with Xi Jinping. It's actually very worrisome because, it's very weird to see one side of the United States explicitly value some of the Chinese ideals, where in reality, you would think those ideals were off the table. Right. And some of those ideals around communism are starting to be embraced by one of the parties that's a little bit more on the far left. And as a result of that, I think that could have an implication for equity markets long term. Datadog is down, Palantir is down, Ginkgo's down, AMC is down, S&P is down. So we're having still a red market. The interesting thing about Biden meeting Xi Jinping is just imagine what happens if Gavin Newsom becomes president, who's already had a phenomenal relationship with Xi Jinping, and if some of those Chinese values actually be exported to the United States. Now, I know this gets into a larger discussion around what those values are, how that stuff will happen, but the article that I linked basically shows the compromise the Democrats are willing to make in working with China. And by the way, Republicans are also willing to make compromises as well. It's just there's a reason Xi Jinping is not meeting Ron DeSantis or Vivek Ramaswamy, right? He's meeting Gavin Newsom. And I don't know. It's just very interesting to see that happening. In terms of on Wednesday, what's going to be done, Taiwan and AI are the main discussions. China has literally said they're invading Taiwan in 2027, right? They pretty much said it's going to happen. So I don't know how the hell Biden's going to manage that conversation, but that implicates everything in the stock market, right? You know how we said there's going to be the roaring 20s? And, as at least in 2020, after the pandemic, the market just went crazy and we had a roaring 20s. It's going to be a very roaring 20s if in 2027, every supply chain in the United States of America gets flipped on its head overnight, not because of Russia, Ukraine, because we have some supply chain in Ukraine, but we've got 99% of our supply chain really in China. If that gets flipped overnight because Chinese companies or American companies can't do business with China anymore because they invaded Taiwan and they're trying to take them over, or worse, the United States tries to protect Taiwan and now we're getting into a literal war with China. I mean, this decade could be very interesting. This could be the last decade that humanity exists. I'm fear-mongering a little bit, trying to be facetious, but you get my point, right? This, like, having good relations with China is very important, which is maybe why Gavin Newsom is cozying up to Xi Jinping. But we'll see. We'll see what ends up happening over there. So load up for the next 4 years. Yeah, that's the message. Let's get some stocks for the next 4 years, and then let's get the hell out of here before everything goes to shit. Benny says, I like how quickly San Francisco can clear up drug addicts and homeless people. They need to impress someone. As soon as he leaves, all of them are allowed to carry on and doing what they're doing. Yeah, and I can't believe that. I mean, I just can't believe that we had this homeless problem for the past couple of months. I mean, really couple of years, but for the past couple of months, it's got really aggressive in San Francisco. That's why all the shops are closing, like Walgreens. You can't buy toothbrushes without asking the store attendant to like open the locked thing. I mean, I was in Vegas. I was trying to buy some stuff in Vegas and I had to like ask them to like open a lock thing. I was just like, this is stupid. This is insane. But they're afraid of crime, and they're afraid of crime because San Francisco is not tough on crime anymore. And the reason San Francisco is not tough on crime anymore is because they have this particular ideological way of how the city should be run. And when Xi Jinping, who's the most tough on crime, you can't say a freaking word about Xi Jinping that's like negative. I don't know if enough people know China has something called social capital. Everyone gets a social capital monitor. Like, let's say if it's out of 100, and there's apps in China where you can see if you're in the same vicinity within miles of people that have a low social capital, and you're supposed to leave that vicinity because that means you're closer to people that are doing bad by the Chinese government. Like, you talk about tough on crime, it's China. And now San Francisco cleans up their act in order for China to come. It's just incredibly interesting, and we're going to see how it affects the equity markets long term. But basically, Xi Jinping cleaned up San Francisco. Exactly. That's what ended up happening. So, we'll see what ends up happening in that. That's going to be a very exciting meeting on Wednesday that comes a day after CPI. So we'll see the inflation data and see how, Biden kind of interacts with that. But meeting with Xi Jinping, man, it's really interesting is what I'll say, to see that actually happen and to see if there's anything that's going to result from that meeting. Let's get one update on retail sales. This is really important. This is going to influence some of our CPI data that's coming out tomorrow. So here are retail sales for the month of October. Let's check on Palantir real quick. Palantir at 1963, still down a little bit for the day. Here are retail sales in the month of October.
The details.
A decade ago, Affinity Solutions, a little-known company, launched into a little-known business, linking credit card holders with incentives like getting $5 off a cup of coffee for using your plastic. Today, Affinity is the largest consumer purchase data insights company with a massive database that tracks nearly 9 billion credit card transactions annually from 140 million credit and debit cards and more than $500 billion in sales. The power of that data is combining with the National Retail Federation and CNBC to create the CNBC NRF Retail Monitor, a real-time monthly gauge of how much Americans, and
Or more 25 years
A
ago.
little more, yeah.
And we used to argue about what was really going on in the economy. And now I think we have a really good, I guess, mousetrap is the best way to put it.
I was thinking the same thing when I
All
heard
right.
about it.
Enough about what the data is. Let's see what it says. The CNBC NRF Retail Monitor, powered by Affinity Solutions, launches in October with a decline of 0.08% for retail, ex-auto, and gas. Core retail, we take out restaurants for that, down 0.03. Retail, ex-auto, and gas month on month. There you can see that actual versus the prior month, 0.23. Year over year, 2.6 versus the prior 4.9. Core retail minus 0.03, sorry about that, versus a positive near 1% last quarter. Year on year, 2.6 versus 4.4. Let's look at the.
All right, so retail sales are up. That's the key point I wanted to make here. Retail sales are up year over year, 2.57%, core 2.63%. What are the implications on this in the context of how you need to understand this? In October, it was down a little bit month over month, year over year, it was up. The consumer is still strong. The consumer is still damn strong. I don't know how the consumer is as strong as we are, but we're strong. I mean, even I bought some stuff over Amazon over the weekend, right? Like, we're strong. We're buying stuff. And at the end of the day, that is implicating some of these equity, some of these different equities that exist in the market. If we go to Amazon right now, Amazon also at 140. Again, it was at 115 when the Lina Khan FTC lawsuit came out. It can't bring Amazon down. Amazon is continuing to do well. AWS is a monster, and the retail sector is booming as well. I think Apple is the biggest indicator for why the consumer is actually strong. I know Mac revenue went down in their latest earnings, and China revenue was not as good as it was. They missed by like a couple billion. But Apple at 184, 2.87 trillion. Apple is a consumer company. Everything they do is oriented around the consumer, whether it's the hardware products they sell or whether it's services, which has been just absolutely phenomenal for Apple, right? Growing at 20% year over year. Services means consumers have to download new digital products, new apps, they have to pay for things with Apple Pay. And so the consumer's strong. Retail sales are going up. Consumer sales are going up year over year, even if it's up 2.57%. Retail, consumers want to continue to buy what they're buying, which is going to allow the market to continue to do better. And it's going to keep working. I can't believe Amazon lost $2 billion in net income in 2022. Yeah, and remember, Amazon was they were following up results in 2020, right? And that's one thing I think a lot of people forget. Same thing with Google. Like in 2020, 2021, they just had absolute insane momentum. That's not going to last forever. And if that's not going to last forever, that's going to be, a little bit tough. Art of War says consumers are buying on credit. I don't know if it's that strong. Well, it's interesting, right? American credit card debt is at 1.079 trillion. American credit card debt is a lot. What I did read over the weekend is that credit card debt is in context of how much more money there is. It's a similar stat to banks lost like a couple $1 trillion of deposits a few months ago, back in September. It's like, yeah, but we printed $8 trillion. So obviously some of that money is going to come out of the system. If you print that much money, yeah, the M2 supply and deposits are going to go crazy in 2020 to 2022. But in 2023, when we start doing quantitative tightening and when consumers start taking out that money and they start paying for a lot of stuff, you're not going to have that much money in the banks anymore, right? Like there's going to need to be a deposit line. That's why it was so nice to see SoFi get $2.9 billion of deposits, because it was like, holy crap. How is SoFi continuing to find this money? And that's because they're getting people to switch from some of the bigger banks. SoFi still 675, down 2.877%. So overall, I mean, the data we went through today, we talked about Gabriella Santos in the context of bonds. We talked about some more macro stuff. 10-year is up a little bit. CPI data we're going to get tomorrow. Retail sales are up. A lot of this ultimately comes down to where the market thinks 2024 is going to be. And I think over the next couple of weeks, we only have like 6 weeks left of the year. We are going to see if Santa Claus comes to town and the market gets excited before the end of the year. At least on a day like today, the market is not excited. Everything being red. Palantir still holding well at $19, $19.45. Or if the market, thinks maybe we do have potential to end the year really in a better way than we started, because 2024 is going to be good. And if 2024 is not going to be good, the market's going to be a little more red going to the end of the year. Tesla, the only green stock I see. There you go. You got Tesla, Disney, Unity actually $27. It was at 22 last week. So Unity, a nice little recovery. Instacart and Verizon is up. So that's your green for the day. Everything else we are seeing is pretty much red. All right. That's it for the market open. Now let's end it off with two things for today. Thank you, 747 people, for being here. We got word of the day. And I also wanted to share something from Twitter this weekend, because I had a little tweet that got picked up a little momentum, even though I didn't tweet it. So last week on the market open, I said, when Kelly made a joke in the chat, I said, if I ever see Kelly on a date and we meet in person, I'm going to tell her that she's Palantir. She's the modern operating system for the enterprise, because she's been such a good friend and all that stuff. But like I said, we never went on a date. Well, over the weekend, that was proved to be a little more incorrect, and I was not exactly telling the truth last week. This is a little photo that she tweeted out over the weekend that I wanted to bring to everyone's attention. And the reason I want to bring it to your attention is because of the caption. She said, "This guy likes to pretend we never met live in front of 900 people every morning," which is, I kind of did do that last Wednesday. I said, yeah, in front of a bunch of people we never met. This is an actual photo of us meeting. I know a lot of people have followed our journey on Twitter. We've been friends since 2022, so we've been around for a long time. She's an investor in my startup. She's an angel investor. So, we have met each other in person, and it is actually real. So you guys can see a real picture of us in person. This is actually at Jeremy Lefebvre's house over Halloween weekend. He invited us to play poker there. So yeah, we were in person and we did meet. So I can't pretend that I've never been on a date with her before, because I have been on a date with her. And I don't see Bay Ray's comment, but Bay Ray. Oh yeah. So he said he also likes to pretend other girls talk to him. So shout out to Bay Ray. He finally made a funny joke, right? Because the caption was, this guy likes to pretend we never met live in front of 900 people. And then Bay Ray said he also likes to pretend other girls talk to him. So Bay Ray, congrats. You made a joke, okay? I hope you're happy that you made the joke. So that is a picture of me and Kelly. Now, she was afraid to post a different picture because I have another picture that I really like that we took in Vegas instead. So she posted like a nice little picture. This is the picture that I like that we posted. It was a nice picture. Oh, okay, that's a little bit too much of that picture. So anyway, it was a fun time in Vegas. I did meet her in person. We did get to talk, and she is a real human being. She's not AI. I know a lot of people thought she was AI. She wasn't real over the past, what is it, like 2 years? Because like no one's ever really seen Kelly. She's just been this figure that's like in the chat all the time. She's a good friend of the channel. So we're like, is she real? And then at Vegas, as you can see by that picture that I just showed, she's definitely real. She's a real human being. So that's pretty much it for us. Thank you all for being here. Bay Ray says, Kelly, you're gorgeous. I would have to agree, Bay Ray. I would have to agree. Word of the day on today. The word of the day, very interesting word of the day, is dacker. To totter or to stagger. Dacker, the toddler, still unsteady on his feet, would dacker and stumble as he tried to walk across the room. So it means when you stumble or you kind of lose your position. And if I had to use this word in this sentence, I guess I would say that when I saw Kelly in Vegas for the first time, I was kind of dackering. She kind of swept me off my feet, and I was staggering a little bit when I saw Kelly in Vegas. That's it. Thank you all for being here. Hope you had a great market open. We'll be back tomorrow, 8:45 a.m. CPI data. We'll be back 8:20 tomorrow. CPI tomorrow at 8:30. Let's see what ends up happening, and we'll keep going from there. Thank you all for being here. And last comment on Ryan. And what happens in Vegas between a young Indian entrepreneur and a Shopify entrepreneur stays in Las Vegas. That is correct. Thank you all for being here. I will see you guys tomorrow on the Market Open. Bye, everybody.